Hi, and welcome to the fifth video of the Demystifying Digital series. And today we are going to talk about blockchain. Blockchain is basically a distributed ledger technology which enables you to store, record, and track transactions across a wide variety of functional data, which could be financial transactions, could be medical records, and land records, for all you know. The important question to ask at this point in time is to say that while we have multiple systems for recording transactions over decades, what does blockchain do differently? Today's discussion is precisely about understanding, therefore, what is the value proposition of blockchain as a technology and what does it do different than the legacy systems. Now let's try and understand this with a set of examples. The first example is of a retail bank or the retail banking sector, where because of identity theft and fraud, 15 to 20 billion is lost annually as per conservative estimates. Now banks have over time responded by creating data management systems, identity recording systems, fraud prevention systems, and so on and so forth, and that has over time also matured. While these systems have given incremental benefits to the bank, it has prolonged the onboarding process and has made it more expensive. And also, there has been need to change the archaic banking legacy systems and governance and operating systems. While this is not a trivial problem to solve, what blockchain does is creates a digital fingerprint. Now, a digital fingerprint is a unique identity of an individual or an individual representing an organization, and this digital fingerprint can be used by a network of banks. It is distributed, nobody controls it, can be used by a network of banks, as I just mentioned, for onboarding, transaction validation, and so on and so forth, giving providence and trust to the entire ecosystem. Now, what therefore blockchain first up has two benefits. One, it is decentralized, which means a lot of people in this validated network can use it and use it for the same set of purposes. Classical IT systems are centralized, therefore siloed in nature, and it makes it very difficult to actually share data. The second thing is distribution. As the document or as this digital fingerprint is, as the entire ecosystem is decentralized, it is distributed over, physically dispersed, and nobody controls it, and therefore it allows a multiplier effect in its usage, reducing identity thefts over a period of time. And therefore this problem has actually helped banks to a great extent solve the identity theft problem. Okay, now next we got to move into the next example, which is of risk assessment. Now, risk assessment is a complex and a subjective process, primarily because data is not easily available. Adding to this complexity is the fact that a huge amount of MSMEs are excluded from the banking process because they don't have adequate data and they are unbanked population. Typically 40% of the world is unbanked and do not have access to credit, as a result of which banks are always conservative for the lack of information, and dispersion of credit has reduced economic growth in many economies and geographies. From a blockchain perspective, it offers the capability of pooling data and volumes of data anonymized and can be protected by a encryption protocol of the ledger's capabilities. Therefore, data carried on a distributed ledger can be accessed without explicit permissions or real time permissions of the parties involved. So in the previous example, we talked about decentralization and distribution. Here we are adding one more aspect to the blockchain's capabilities called encryption, the ability of private and public keys which make the records secure, and therefore the fiduciary nature of the transaction enables the data to be used for purposes of credit evaluation and appraisal, opening up a new world of opportunities for unbanked population. Now let's move to the so now at this point in time we have discussed three important attributes that a blockchain does, which a centralized automation or an IT system is unable to perform, because centralized systems are by design controlled and therefore they do not share the data across multiple systems. So here we have blockchain doing exactly the opposite in terms of decentralization, distribution, and the quality of records which are private encrypted, which gives a secure access to the record and nobody can actually tamper around it. Now let's move to the third example. And the third example is from the insurance industry, and it's a big opportunity. Property and casualty insurance is a space or a sector which has gone through a lot of transformation in terms of technology innovation. Now, there is a huge movement of vehicle insurance being personalized. Now, what does it mean? Typically, if you look at vehicle insurances, they are set as a particular algorithm driven in the age of the car and certain benefits that you choose. A particular algorithm generates your insurance code. This process of personalizing an insurance contract is exactly the opposite. It gives credit for behavior, driver behavior, which is mileage, speeding, and so on and so forth, and also safety incidents, which is the number of times the car had a minor or a major accident, the nature of accident, and so on and so forth. Now, how does an insurance company know or have the data to be able to actually precisely credit the driver for positive behavior or reprimand the driver or ask them to pay a premium for dysfunctional behavior? To be able to do so, blockchain is a solution, and the feature of blockchain is called immutability, which basically means that all data is completed transactions are cryptographically signed, time stamped, and sequenced in the ledger, which means you can actually use the data, and this is validated immutable data for the insurance company to share amongst all its networks to be able to precisely configure a quote, giving credit for positive behavior and charging a premium for negative behavior. So in this case, we have added the fourth feature called immutability in terms of the blockchain's capabilities, and therefore this immutability feature is enabling a fundamental disruption in the PLC industry. There is another feature which we have not shown as an example for the paucity of time and to keep this video succinct. It is called tokenization. Tokenization basically involves exchange of value through tokens. And in the digital world where there are a lot of microtransactions happening, and as sensors are emitting data and huge amount of data is getting transacted through multiple sources, it is impossible for classical systems to value a microtransaction, keep an account of it, and therefore bill you for it or give you a credit or a debit for it. And that's where blockchain's tokenization comes into play, where these microtransactions are executed in real time and at a micro scale, which the classical financial systems cannot deliver. Typically, there are multiple types of tokens. They are the fiat tokens, which is issued by the government, process tokens like the Q coins of Telecent, and cryptocurrencies. So, therefore, or to sum it up all, blockchain is essentially a data structure which ensures security and transparency and decentralization. It is you can visualize it as a chain of records stored in forms of blocks which are controlled by no single authority, which therefore and the data is secure, timestamp, and nobody can actually change it. So multiple people access the data, they gain benefit of the data, they use the data for purposes which siloed systems would not allow them to do so, and that the sharing of data creates an ecosystem of trust and providence which was not possible in siloed and configured system to meet a particular purpose. Therefore, blockchain opens a huge amount of possibilities in terms of sharing of data, the quality of data, and assuring the fiduciary nature of the transaction of the data. And that is what makes blockchain very, very powerful. So friends, with this video, we complete our series, our Demystifying Digital series of 5 videos, where we talked about 3 technologies now: IoT, AI, and blockchain. We discussed what digital is and what it is not, and also what makes a digital leader. And I hope you liked the series. As we close the series and move on to disruption of multiple industries using technology, which is our next series of videos, stay tuned in for more content and let us know how you liked it. In case you liked the content, share the video, Subscribe to our channel and keep watching the space. Thank you.